But today, this webcast is being delivered by Trader Circle, and our focus is going to be on delivering a market view, looking for new trades, and then covering the core skills that you need in order to be a successful trader. Now, this is only one part of the webcast. So today we're going to go look for trades, right? We're going to be applying our direction picking skills, mainly through technical analysis, right? Which we think is, much better suited for shorter term styles of trading. If you haven't watched like a beginner's webcast that I've run previously, like I think I ran one last week or the week before, and I've run several in the past, you should be able to find those on our YouTube page. And if you get a bit lost during the technical analysis, I really encourage you to go and check out that YouTube page and go look at kind of how we apply technical analysis. And even more importantly, what we think the foundations of technical analysis are, and therefore the things that you should really go out there and actually start to learn if you want to become a trader. Okay. So we're not going to teach you technical analysis today, but instead we're going to be mainly applying it in the live market, looking for trades. And that kind of brings me back to that other point I made earlier. In your chat box, if there are any stock you want us to look at and apply our analysis to, again, keeping in mind that we're looking at from a short to medium term perspective, then please type them in the chat box. And if we have time, we'll get around to looking at them. Some of you have already posted some of the stocks you want us to look at by replying to the emails we've sent you. So we've taken that into account. We've got our list ready, and Tim will be running through that in a moment. So my name's Karo. Again, you would have heard from me before if you've attended some of our webcasts. And the other presenter tonight, as I've mentioned, is Tim. Now, I myself have been with the business for about 8-9 years. In fact, I think Tim and I started roughly around the same time, actually. I started in a very limited capacity as I was still going through university. And Tim basically back then started as a trainer, basically my job. So what I do is I'm an advisor who helps clients with their trades and gives them trade ideas, helps them price up strategies. You might be out on the road, right, and you're not exactly aware of how your position's going. You can always call and chat to myself or one of the other advisors to get an update on your position, and we can execute an order on your behalf if you want to as well. So that's our jobs as advisors, and Tim's the head of the trading desk that oversees the advisors. I myself am also a trainer. Well, I'm the head trainer, so part of my job is to train new students, right? So that's one thing that really, we really pride ourselves on, something we've been doing for a very long time, is educating our clients, right? So we will provide you with recommendations and we will provide you with advice, but we want you to understand those recommendations. We want you to understand that advice. And a lot of people who come to us aren't sophisticated enough, or they want to improve what they're doing, right? So it makes sense for us to provide that education. Just one moment, sorry. So, sorry, my doorbell just rang. This is one of the things you can't help when you're working at home. Hang on a sec. Sorry, once again, my partner's grabbing it. Anyway, that's enough about Tim and I. Tim is a wealth of knowledge. I will just hype him up a little bit more. He's, like I said, the head of the trading desk. Him, myself, and the other advisors, we catch up twice a day, talk about trades, talk about what's going in the market. And the type of session that Tim's going to be running through for you today is something that we actually do every day for our clients. So from Monday to Friday, when the market's open, obviously, from 12 to 1, we run a live webcast where we go through the market and we look for trades, right? And any client who has membership can jump into that webcast, give trade ideas, get some advice from the group on some trades they might already be in. Tim runs his on a Tuesday, for example. I run mine on a Wednesday. Sam, who's a colleague of mine, another advisor, he ran his earlier today on Thursday. And so it's a great way to not only learn, right, but also to find trades in the live market with a professional trader. If you can't make those sessions, they are recorded and they're placed on the website that night. But what my point is that a lot of what Tim presents today is something that we actually deliver to our clients, throughout the week. Except, in fairness, it's probably a little bit more robust. It's probably a little bit more sophisticated because the clients have done our education. All right, enough about that. Before I bring Tim on, I do just want to explain that any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. All right, and one other thing would be if you can't attend today, so if you'd like to rewatch this webcast, then you can by, we'll send you the recording basically. All right. Tim should be able to just take it away. I'm going to stop sharing my screen.
Thank you very much, Karo, and thank you everyone for jumping in today. Just give me one moment. I just need to share my screen. There we go. Okay, thanks for the intro there, Karo. You should all be able to see my screen now. So yeah, today what I want to do, I don't want to get too complex in going through everything that I look at to form a directional view. Okay, so obviously where I'll start is just by saying that there's two key forms of analysis that we use. One is called technical and one is called fundamental. Technical is all done on the chart. Okay, so we look at historical price data, which is in front of you right now on the screen. We look for patterns. We look for certain things within each bar that's in front of you here to help determine a view. Okay, so we bring together a bunch of different technical analysis techniques, and then we go form a view of a stock and build a strategy around that. So technical analysis is really good for shorter term trading, guys. Okay, it's good for trying to pick what's going to happen over the next few weeks, the next few months. Whereas fundamental analysis, which is the other side of it, is more better for longer term. Now, you know, examples of fundamental analysis is this type of analysis here, where you're more looking at maybe a scoring system. So how well does it score from a dividend point of view? We look at quality. We look at, you know, how good is their credit, so how good is their borrowing score, have they too much in debt, are they too little in debt, you know, earnings scores, growth scores, all that sort of stuff. You know, there's different key ratios. We look at PE, that's more common. Most people would have heard of a PE ratio. This is an example of fundamental analysis, and what you find is if a stock looks really attractive fundamentally, it doesn't necessarily react straight away in the marketplace. Sometimes, in particular Fortescue, we look at it and we keep saying it's so cheap, but it spends months and months and months going sideways. So there's no point in trading the fundamental numbers short term. This type of fundamental analysis is only really good for buying and holding and waiting. Yeah. So if you're building a investment portfolio where you want to buy 10 stocks, and you just want to sit on them for the next 2, 3, 4, 5 years, well, you're going to be leaning more towards that fundamental type of analysis like this, and just using technical analysis for timing. If you're looking to trade, and whether you're going to be a day trader, whether you're trading a 1 or 2 day view or a couple of weeks, couple of months, then you're going to be spending more time on the chart. Okay, so what I will be doing today is spending more time on the chart. The idea of Trader Circle webcast is more talking about shorter term trading. So what we're going to do is do a follow-up webcast next week, Thursday at 7 o'clock. So today's all focused on technical analysis, picking direction. Next week, we'll show you the strategy side. Okay, so we'll show you some option strategies. We'll show you some mini warrants. We'll show you the different financial products that we use to trade the Australian market. All right, so anytime that I'm looking at the market, and the first place I'm always going to start is on the XJO. The XJO is the top 200 stocks of our market. It gives me a good indication on the overall sentiment of the market. Is the sentiment, is the market trending up? Therefore, sentiment is strong. Is it trending down? Is it trending sideways? They're the types of things that I'm looking at. And straight off the bat, what I do is I scroll out to around about a 2 to 3 year period, and just have a look at what the current trend is. Now, a trend basically is when you get higher peaks and higher troughs, and that's what we're seeing through here. Higher peaks, higher troughs, higher peaks, higher troughs. There's periods of sideways through that, but nonetheless, the overall trend is higher peaks, higher troughs. So the trend is up. All right, we've already recovered all of the COVID pullback. okay, which kind of makes sense now, right? So this week we broke into all-time highs. What drove the break into the all-time highs was actually the GDP reading. You've got the treasurer out there, Josh Frydenberg, talking to the fact that our economy is now larger than what it was pre-COVID. So it only makes sense that our stock market breaks into higher levels, right? And that's kind of what's driving things a little bit at the moment, okay? You've got, so I'll just talk a little bit to the fundamentals of why there's positive sentiment as well here. You've got a RBA that's extremely accommodative at the moment, extremely low interest rates, and also huge amount of bond buying. Fed's doing the same over in the US, okay? So from a monetary policy point of view, it's extremely accommodative. Then you've got an economy that's rebounding, okay? Now, we know the rebound may only be temporary, okay? It probably hit a roof very quickly, but nonetheless, right now, that's what investors and traders are looking at, okay? So we've got a rebounding economy, therefore, we've got a rebounding stock market. And that's where you sort of see that really how that sentiment pendulum swings around a bit. Everyone's ignoring the fact that Victoria's in lockdown. I think everybody's now used to the fact that a short-term lockdown is normal. Okay, if it goes any more than a few weeks, I think everyone gets a bit worried at that point. But right now, look, I think everyone's just focused on the fact that monetary policy is loose, extremely accommodative. You've got a rebounding economy, and that's stronger than what it was pre-COVID, and with no signs of the RBA turning the tap off yet. Okay, so right now that's where the bullishness is coming from. So if I start scrolling in, and that's what we do, is we start out long term, all right, couple of years, we start moving in closer and see what's happening. So we just came off a very sideways period. So from the beginning of April right the way through to the end of May, the market really didn't do much, did it, right? We spent a lot of time just whipping around between 71 and 7,000, 71 and 77,000. It was a very, very, very boring market. Now we came back down, we tested the uptrend line, which was key support, which is previous resistance, and that's a very key thing that you're going to see in an uptrend. Resistance becomes support. So resistance, played with that resistance, went sideways under that resistance, it broke that resistance becomes support, sideways again, test the trend, and up we go. Okay, so it's very, very common to see that type of behavior inside an uptrend. Okay, we tested the uptrend line, and now we're breaking through. So right now, what we're focusing on, okay, is really this. Right, we're drilling right down to the short term here. You draw yourself in a nice little uptrend line here and go, okay, well, until that breaks, we're on an uptrend. So from a trading perspective, what type of trades will I be favoring right now, considering we just broke resistance and we're now reconfirming an uptrend, right? Think about that for a second. So if the main market's trending up, the main market's breaking higher, what strategies will I be leaning towards? Bullish, right? I want to trade the upward direction right now, not the downward, because the trend is up. And that's what I take from looking at the XJO is, what am I going to really be focusing on, right? If you look at my trading portfolio at the moment, guys, there's not one bearish trade in there. Okay, I'm completely long this market. Only bearish trade I did was a speculative bearish trade on CBA, which I regretted at the end. But you know, I'll talk to that when we pull CBA up on the chart later on. Okay, so basically, I'm completely long this market right now because of what I'm seeing on the XJO. Okay, it's obvious if you think about it. All right, so you guys have given me a very big list of stocks to run through, so I'm going to quickly just start running through them and talking to each one. One of my favorites at the moment, which about 3 of you guys have requested me to go through, is BHP. Okay, so BHP, once again, the first thing I do is go out in time and go, okay, what's the current trend? Well, that's easy, it's up, right? However you want to draw that line, there's no nice way of drawing that uptrend line, guys, okay, by the way. But nonetheless, you'll all agree we've got higher peaks, higher troughs, higher peaks, higher troughs, all the way along here, okay? So I don't need to focus on that particular line because it's not a nice line to draw. I zoom in until I find where a good uptrend line can be drawn, and right now it's through here. Okay, that is the best line to draw that best represents the current trend. Okay, so that's why I would draw that in. Okay, so basically now what you're seeing is an uptrend in place. We had a nice big pullback into that trend. I'm just going to get rid of that line because I don't need that anymore. You can see there's a lot of other indicators on here, guys. I'm not going to go through all that today. You know, just quickly to really teach this stuff, it takes a while. I can't do it all in one webcast. Just giving you the high level of how we go about things, but there's a lot to be educated on here. All right, so once again, similar to what we've seen on the XJO, it's come down, it's tested the uptrend line, and now we're rebounding off. We've got this little uptrend line is what I'm focusing on right now, as long as that upward momentum continues, okay? So the reason why I draw lines like this in is to keep a reality check on. When you're, like, I'm bullish BHP at the moment, right? So I've got a straight call option on this, and I'm just sitting on it, letting it run. Now, I don't have the expectations it's going to go straight up straight away. I've got an expectation it's going to do this type of movement on the way up. And as I'm managing my trade, I'm watching to see whether this particular line holds. If it breaks, it's a warning sign that something could be changing, right? So this is the same thing as if you're looking to get into a new trade. All right, we look for this line as a bit of a guide to suggest the current movement's going to continue. So if it pulls back onto that line and then looks to bounce off again, that's actually a good time to get in. All right, so what we've seen is a gap higher and then a little bit of sideways. So I suggest wait here, guys. I want to be getting in today because we're seeing the upward momentum in the short term's dying out. How am I seeing that? Look at the day's bar. See how it's not closing with the current price at the high of the bar? What that's suggesting to me is there's a little bit of indecision here. It jumped too quickly. There has to be a little bit of indecision like it did last time, and then it's going to come back to the trend line. Once it hits that trend line, then I'm going to be looking to go long again, as long as it holds that trend line. Okay, that's how I'd be going about BHP right now. Unfortunately, you've missed the boat a little bit here. Okay, I still feel it's going to 52, so there is still a little bit left in it, but I wouldn't be jumping in today. We actually did a recommendation on this. We got in here and we got out there and pulled in a good, I think it was about 30 odd more. I think it was 30 or 40% on this trade. It was just such a good gap higher. We did quite well out of it. But we're out of this now. I'm personally still in because I'm greedy a little bit, and I've got a fundamental view on this as well. And that's okay because every trader trades with slightly different rules. Okay, my rules haven't triggered to take profit yet, so I'm still in. The rules we teach in the course, that Karo teaches in our courses, suggest to get out at a 20% or above profit, which is to the letter of the rules. With an inner circle recommendation, we'll always recommend to get out once that hits that limit. So and look, that's another discussion, guys. Okay, but nonetheless, right now I still believe this is going to 52 eventually. Okay, it might take a bit of time to get up there, guys. Just be wary. It can just grind up from here. It has leaped very quickly already. The reasons why I believe it's going up higher is, one, technical that I've already shown you. Two is fundamentally, you've got the main three things that BHP does: iron ore, copper, and crude. All three are performing extremely well right now. And I don't feel that's represented in the current share price. So iron ore's back above 200. Copper's created an all-time high about 3 or 4 weeks ago, and it is just going sideways up there. And crude is expected to get over $70, right? So I suspect this has got a fair bit of upside to go. So Paul's just asked a quick question here. So should trades in the current market be in the money, at the money, or out of the money? Look, that's a very vague question for me, Paul, because it depends on what strategy you're choosing. If you're talking about just a straight bought option, okay, or are you talking about something like a bull put? Because if it's a bull put, then I'd be saying an out of the money bull put, which means it's time decay. So I'm not sure exactly what you're referring to, which strategy. If it's just a bought call, let me know, and then I'll know the context behind that. You're talking about a spread. You're talking about a bought call. That's the type of thing I need to know. Okay, so I'll just keep talking to BHP while you're answering that. So the other thing, the reason why I'm quite bullish BHP is the forward price to earnings ratio is only 11. That's extremely cheap. I don't believe that 11 that people are putting big broking houses that put these forward projections out. I don't believe that they are pricing in iron ore at 200. Right? I still think, and they often do this, they often price iron ore in at, say, a good 30% away from where the market is. Okay, so I think that the actual forward PE of BHP is lower than this, and people are going to get that reality check come August when they report. Okay, there's no way BHP is not going to beat this expectation in my mind. Because of what we're seeing in the iron ore markets, what we're starting to see in oil, and what we've seen in copper. All right, so I do feel very strongly that we're going to head back up to 52 eventually. In the short term, things can get very, very whippy, especially the problem with these miners at the moment is China. Okay, so bought call at the moment. Okay, if you're getting in down here, Paul, okay, closer into the trend when we got in down here, I would have been more than happy personally to buy something slightly out of the money. The way we teach it in our courses would have been that you bought it at the money. Okay, for me, buying at the money or slightly in the money is a lot more conservative. Okay, because you're paying more for the option that's less leveraged. Okay, also there's a tangible value there. If it goes sideways, you'll keep that tangible value. Whereas an out of the money option, okay, you want to do that 4 or 5 months out. Therefore, you have plenty of time for that movement to happen. Okay, so definitely, Paul. Right now, if you're going to get in on trend here, I'd be still doing at the money. Okay, down here because the stock was oversold, I would have been happy to take a bit more risk. Now, because the market, because it's becoming a little bit more to the overbought. Okay, I would be going at the money. I'd actually be doing a bull call personally. Okay, right now. Okay, because it's gone up so much, and it could do one of these sideways movements. So I'd be doing a spread called a bull call, where we buy a call, we sell a call. I'll explain that strategy next week. Okay, so please tune in next week. I'll explain that one. But yeah, I'll definitely be preferring that. So Paul Benedict has asked, is it worth considering selling a short expiry BHP option at 52? Yes, if you own the stock and you want to do a cover call, I don't mind that idea, because if you do get exercise, you're going to be taking profit anyway. I don't think I'd be doing it today. I'd wait for a little bit more of a run up, to be honest, Paul. Personally, I really feel that it has a bit more in it. So if it was at resistance already, yeah, sell at 52 or slightly higher. But today, I don't think it's the day, right? I've got iron ore futures that I keep an eye on. It. Iron ore futures are up again today. I don't see a point of doing a sold call just yet with iron ore futures still rising. All right, so that's BHP, and look, I'll keep going through. Someone suggested Fortescue as well. Fortescue, similar view to BHP. I still think it's extremely undervalued from a fundamental standpoint. This is the cheaper of the three big miners on our market, okay, from a PE point of view, but they don't have the diversification that Rio and BHP have. Okay, so the other thing that I'll just mention is this is in a massive pennant pattern. Okay, so you can see there's a lot more uncertainty in this chart than what you're seeing in BHP. Okay, this is already a ways off the longer term uptrend. It's holding the short term uptrend. And look, if I was going to trade anything right now, because this has got a little bit of a pennant happening, you got lower peaks. I'd much prefer to be in BHP right now than Fortescue. You got the diversification in BHP, and you got the better trending stock. Okay, where this has been a lot more whippy than what BHP has been of recent. Okay, it hasn't joined in on the gains as much. BHP is the safer bet basically, but Fortescue, yeah, very undervalued. I like this from a portfolio point of view. Happy to buy and hold on this until we get confirmation on how China is going to stop buying our iron ore. To be honest, guys, I don't think it's going to happen for a very long period of time. Okay, so that's Fortescue. Let's run through the list real quick as well. No, I'm just going to be wary of time. I can only get through as many of these stocks as I can get through. Okay, so someone else has suggested CBA. Okay, CBA is running red hot at the moment. Finally broke through the $100 level, guys. We were joking in the office years and years and years ago which stock would hit 100 first, CSL or CBA. I think two of the guys actually did a bet on it. Obviously, the CSL guy won. CBA pulled right back a number of times since then, but we've finally seen that $100 level. Look, the trend is up. Okay, we can see that the longer term trends through here. But you see that acceleration, okay? There's a huge acceleration up to that $100 level. $100 has to be a psychological level, guys. I would not be buying CBA here. This is running much higher from a price to earnings point of view than the other three big banks, okay? So NAB, Westpac, and ANZ are all running at a forward PE of around 14. This is running at 21, 22. It's gone too much too quick. If you own the stock, I'd be selling calls on this one, definitely, okay, at around that 102, 103. But I feel there has to be a pullback in this or a very long sideways period to come, okay? I really do feel like CBA probably will hang around here until it finds the trend again. And it'll either do that, okay, in months and months and months of sideways, okay, or it'll do that by pulling back. Okay, one of the two will likely happen soon. Keep in mind, when I say soon on that, it could be August, right, before it pulls back. It doesn't report till August, okay? So it has its dividend late August or early September. It might just hang sideways into that report. But I tell you what, that report has to be something pretty spectacular for this to continue rising because, yeah, it's getting pretty expensive for a bank, guys. It really is. So for me, CBA, it's found its resistance at 100. I wouldn't be touching this one way or the other. It tried to rise today, pulled straight back. I'm not surprised at all. I wouldn't be going long this stock anymore. The way it's just way overheated. One of my indicators I use is a stochastic. When it spends this amount of time in the overbought area on a stock that's running at a high price to earnings, leave it alone. Okay, that's my opinion. I could be wrong. I'm happy to be wrong, but that's one of my rules, guys. One of the things that I live by, and it does me well more times than not. Okay, so yeah, CBA for me had its race. I'd prefer to be in one of the other banks if I was going to trade a bank at the moment. My pick would be NAB or Westpac. Okay, they both reported a bit better than ANZ, and they're both still running at a level where I'd be happy to buy. Okay. All right. So what else have people suggested here? Someone actually has asked for NAB. So let's quickly just jump over to NAB and same sort of deal. It's found some resistance at the moment, guys. I feel this will probably hang sideways for a while. I think the banks will underperform the miners in the next month or two, purely that the banks have had a huge run over the last 6 months. They're getting a little bit on the pricier side, where the miners for me are still a bit cheap, okay? And the miners have got some more positive news around them with iron ore breaking back above 200 and metals holding extremely strong. So for me, yeah, still going to always pick a miner over a bank right now. But yeah, NAB is testing resistance. There's an uptrend there. It's going to keep getting squeezed between the uptrend and the resistance. I'll leave that alone until it breaks. If it breaks, yes, consider a long position. But what I would be looking at for something like this would be a strategy called a bull put. Try and get your sold put below trend, okay? So below 26.50 somewhere. You'll only get the opportunity to do that on a slight pullback. But I think a bull put on this below trend would be a good strategy. If I'm going to go buy calls on something, it'd probably be the miners, not the banks right now, guys. I think the banks are losing momentum. If I'm going to do a strategy on a bank right now, it's going to be something that has more time decay positive on an option. Therefore, if it keeps whipping sideways as it has since March, I can make money out of that sideways movement. Okay, so it's a very different chart, isn't it? When you have a look at this, right, from March to now, that's very sideways. It hasn't budged and it hasn't broken higher, even though the market's broken higher. When you go back to BHP, what's it doing? It's not really going sideways. It's morely trending. You're getting big trend movements, yeah, getting huge movements. So when you have a look at that, that is that's a 14% movement back to trend from there to there. Okay, the move back up through here. Whoops, sorry. The move back up through here was 17%, and then if I go back to NAB movements here, okay. 4%, movement here, 4%. See the difference? And it's just really going back to similar levels. So this, for me, is a time decay strategy stock at the moment. Bull puts, things like that, out of the money for you guys that know your options. If you don't know your options, we'll explain that next week. Where BHP is more of a trending, I'll be going more the bull calls, across the money bull calls, the buy call, that type of thing. All right, so let's keep moving through. I'm trying to move quickly because there's a lot of stocks on this list. So I'm trying to get through as many as I can. A couple of people have asked about Linus. Okay, Linus, it's one that we've been looking at pretty closely recently. It is holding this support level. My problem with Linus is the trend's changing. Okay, so you've got this uptrend through here. Then you had another acceleration off that trend through here. Okay, and now it doesn't matter how I draw my line through here, it's broken. Okay, even if I extend the longer term one up, I'm nowhere near current price action. The current trend is now down because you've got lower peaks and lower troughs, lower peaks and lower troughs. The last few troughs have been equal though, so you can see there's a struggle. Okay, but it doesn't matter how you look at this, the current trend is down. Okay, and it's squeezing in to what you would call a descending triangle. So yes, you've got a little bit of a buying signal there today, okay, from a short-term perspective. Sorry, let's slide that tool on. Let's flick over to this. Okay, so what I'd be concerned about here is, one, you're trading against the trend if you're going to go long. Two, there's a resistance level close by. Okay, so our rules wouldn't fit for this today for a bullish trade, even though there's a buying signal, because resistance is too close by. Okay, and you're going against the trend. So for me, I think there's much better out there right now. I think there's a lot of uncertainty here. This could be the bottom. You've got a double bottom starting to form, but it's not enough for me to say that I would get in today, that's for sure. So for me, this is a leave it alone, wait for a proper break. Okay, I would like to see this resistance break, and I would like to see that downtrend break before I go long. If it breaks the support level and gives me a shorting signal or a bearish signal below that support, I'd go short because I'd be following the trend and I'd be more than comfortable to do that. So yeah, look, that's where I am technically with this. Fundamentally, look, it's not a cheap stock, guys, in my opinion. But it's been, I think when growth stocks come back into favor again, okay, this will take off again, right? But for now, yeah, I'd be leaving this one alone. I don't have really a short-term view until either that support breaks or that downtrend line breaks. Okay, once one of them go, then I'll have a bit more of a view on it. Okay, so what else have we got here? CCL. I haven't looked at that for a very long time, so let's have a look at that. Okay. That's right. There was a takeover offer from the European Coca-Cola. I stopped following it from there. Did they delist altogether, guys? That came off my radar once that all started. Once this sideways movement started happening, I just left it alone. It's not even quoting, guys. So it's either in a trading hold, or I think the buyout must have gone through. I'd have to come back to you on that one, Paul. It's not one, like I said, that I've really been following at all. It hasn't been on my radar for a long time, for good reason. All right, I'll keep moving through because I don't have the time to do that research right now. What else we got? Newcrest, RRL. Let's cover some gold stocks off. So if I'm going to look at gold stocks, the first thing I'm going to do is go look at gold, right? So spot gold at the moment has been trending up again. All right. So it was trending down from August last year through to just recently, where we finally saw a break of that downtrend line, and now we're seeing higher peaks and higher troughs. So the trend is up. And you can see I've already got all my lines here, because this is something I look at on a regular basis. It's taking a breather around 1900, okay? Loves that level. It did take a breather around there for quite some time in the past. You can see it's used it as resistance a lot of the time. What we're looking for is that next good signal off here, okay? It's tried a few times, and it hasn't been able to do it. I feel a small pullback here would be healthy. Okay, if this pulled back a little bit closer to this uptrend line that I've got drawn here, this upward channel line, if it pulls back to around this line again, I'd be pretty damn keen to do something in this space. There's a big question mark here in the short term for me. All right, it's hit a key level. It's just going sideways at that key level. This is the time to be patient on the gold miners and just wait for that next signal. Okay, so let's quickly jump across to a few of the miners, and what you'll find is they're probably doing something very similar to this, right? So look at Newcrest. It came up to a key level, and now it's just going sideways and grinding and grinding and grinding sideways. So for me, I wouldn't be going directional here yet, but I tell you what, a breakout of this 29 level through here, yeah, I'll be a pig in mud, guys. I can't wait for it. I've been watching this every day for the last, I don't know, probably month, since it tested up here and pulled back, and came back around here again, around that 200-day moving average. I've been waiting for gold and this to break higher. So yeah, definitely keen. One thing we're talking about internally, and you know, we might even look at it today, who knows, or tomorrow, is a bull put. Newcrest actually gives pretty decent credits on bull put strategies. So we're looking at maybe a sold put at 27.50 and a bought put at 27 for the June expiry. I don't mind that as a trade. I think sideways is the theme here. Yeah, so that's one way of going about it. David, you've asked for RRL, which is in a similar sort of space. This stock, it's just been punished by the market, guys. Absolutely punished. Can't remember the full fundamental reasons. It's not one that I follow. I saw the disconnect and I stopped even. I took it off my watch list, so I haven't really bothered with it, to be honest. With this one here, it looks like it's bottoming out. Okay, you know, which is pretty clear. Okay, you've got no confirmation though, right? Until it breaks resistance and starts showing me higher peaks, higher troughs, I'm not keen on it at all. Right, the trend's down. Until that trend changes, I'd be leaving this one alone. Okay, there's a clear downtrend. It's bottoming. It's something that maybe would be starting to get interesting again technically if it starts breaking higher. There's a lot of ifs there, guys. Just wait for it to break higher and then look at it, right? Okay, so Woolworths, Wesfarmers is some of the others that have been asked about. I might keep going for another 5 minutes and then hand back over. Woolworths is starting to have a nice little run up again, okay? I wouldn't say Woolworths is really cheap at these higher levels up here. It's not extremely expensive either. I think that things like Woolworths and Coles had it pretty good last year with all the lockdowns, especially the massive lockdowns for long periods of time. I kind of feel like, where's the growth going to come from such a good year that they had last year? So I'd be very surprised to see if them break through this upper level. There's a bit more going on with this stock, I believe, with the demerger. I don't know where that's at, to be honest, guys, but yeah, that could be part of the reason why it's running a bit hotter than Coles at the moment. The upward channel is clear. There's an uptrend in play up to the top of the range. If you haven't gotten in on a bullish trade, I think you've missed it, to be honest. I think this is getting a bit too overdone. I don't like getting in at the top of the range like this. If I was going to get in on a trade on Woolworths, it would be on back down either at the lower part of this upward channel, or at least down at 41.50, okay, where this little short-term uptrend line is. So, you know, yesterday was your signal. Today you got your continuation. You've missed the move. It could go another day or two. but I think there's better out there, to be honest. But yeah, yesterday was your signal, guys. If you're going to trade that, I think today you're kind of a bit late to the party. You're already very close to that next resistance. Okay, so that's Woolworths, Wesfarmers. Okay, down a bit today. It's just at a key level. It's stuck between the resistance of the all-time high and the uptrend line. Okay, so not much to say there, guys. Look, the trend's too strong. I'm not keen on the bearish trades at the top there at the moment. Okay, but what I would be happy to do is go long if it got back down near this 54 or 53 level. But you can see uptrend in play. Resistance is close. It's being squeezed. Okay, it really hasn't done much other than go sideways since January. It's probably fairly priced. I wouldn't say that it's cheap or expensive either. I think it's just sideways from here for a moment. For the moment, I like Wesfarmers as a company, by the way. You know, Bunnings Officeworks are extremely successful. They still own a small portion of Coles. You know, plus they're very diversified. Got coal assets and things like that too. So, but yeah, look, it's not much really to say. It's pulling back below resistance, going sideways. What else have we got here in the list, guys? What else have we got? So, Paul, you've asked for QBE and Suncorp. I'll quickly cover those. The insurers were pretty badly treated after the COVID pullback. They haven't gotten even close to the higher levels of where they were. Purely because a lot of people cancelled car insurance and stuff like that because they weren't driving around, right? So I know a lot of people in Victoria through the lockdowns last year that did that. There's two things that have hit these insurance plays, a lot of things that hit the insurance plays, right, over the last few years as well, all the fires and things like that have happened. So there's a lot that hasn't gone the insurer's way, okay? In particular interest rates as well, okay? I'm not going to get into all that. QBEs can spend a long time going sideways, right? It is just in the nature of the stock. If I just get a bit more history to load here, it is the nature of this stock, isn't it? Look at it, just goes sideways. It has these little trending periods. It snaps back down. It's a very whippy stock, yeah, very whippy stock. Not one of my favorites, to be honest, right? It's just very, very erratic, very, very whippy. 1 minute it's going dead sideways, the next minute it's launching up. It's just a bit of a dog's breakfast, to be honest, from a charting point of view. If I was going to say anything right now, it's breaking resistance. There's a little bit of an uptrend playing out here, but once again, you're late to the game, okay, from a short-term perspective. Maybe not from a long-term, but from a short-term, if you're trading calls and minis and things like that, you're a little bit late to the game, right? This was the better times to be getting in after a bit of a pullback. So I'll be looking to get in on the next pullback on something like this. To be honest, I wouldn't be touching this, but yeah, if I were to play this, it'd be on a pullback, not on strength. The trend's not good enough for me. Only time I get in on strength is when the trend's obvious, okay? So, you know, for me, BHP was an obvious one because there's an obvious uptrend there. And I've got some fundamental reasons to be bullish to stocks. If it pulls back, then get in, right? These are the types of trends I'm looking for. ASX is a good one to demonstrate a trend when it was, you know, it's starting to trend now, for instance, but you know, if you got something like this, you can get in on strength, can't you, right? Even though it's risen, it's probably going to keep going, okay? So when you've got nice, strong trends like this, yes, I'll keep going. I'll get in even though it's gone up, if you know what I mean, all right? Whereas something like QBE, it's just gone too hard for a sideways moving stock, okay? That's where I'm at with that. Like, it's predominantly sideways. It's pushed up quite strongly. Wait for it to pull back a bit. All right, where are we at? We're 10 to 2, so I probably need to wrap up there, guys. Unfortunately, I could keep going for the next hour. There's so many things that people have asked for here. Look, this is what we do trade groups for clients, okay? So this is a prime example of something we do for our members. We do it every day, right? I do mine on Tuesday. Karo does his on Wednesday. Sam did his today. As part of our membership, we do exactly what I'm doing here. The only addition is I'll have my options calculator and my mini warrant calculator open, pricing up the strategies to go with the analysis, right? So this is just to give you a bit of a demonstration on how we go about things. It's a bit of a demonstration on what we deliver to our clients on a daily basis as a quality of product that we deliver. So guys, look, if you want to see the other half of what we do, jump in on next Thursday night and we'll go through some strategies, okay? So, excuse me, we'll prepare some strategies for you based on what's happened that day. So we'll have an entry signal and a strategy on how we would trade it. Now, if you don't understand options, still come along, right? We're going to show you what the power of options basically, right, through that demonstration as well. So you can actually see whether it's worth your while to go learn options or not, yeah? There's a fair bit involved in learning that sort of stuff, okay? So look, once again, thanks for jumping in. I'll hand you back over to Karo. He's got a few things he wants to go through before we tune off. Don't be afraid to put more questions in. We'll do a bit of Q&A before we finish the session, guys. So if you've got any other questions around what we've just talked about or what Karo's about to talk about, start putting them in the Q&A box now, and we'll answer them all right at the end of the session. So Karo, I believe you should be there waiting to take control again.
I am waiting. Yep.
I will...
And he's gone. All right. So I'll just start screening my screen again. Hang on a sec. All right. So some nice comments there. Thanks, guys. Yeah, Tim does always a fantastic job. You know, like I said, Tim does that every Thursday, kind of. Well, he runs through stocks and he goes through the market, applies strategy. And as Tim said, we're going to be kind of covering that second half, applying strategy next week. Because you can see it's like we wanted to cover a lot of ground in the direction picking side of things, and we couldn't really do that whilst at the same time teaching options. And if any of you are options traders, just give me 1 second. If any of you are options traders, then you'll notice that it's not a simple thing to learn, is it? Really, it can take a lot of time to understand. But I think we do a really good job of teaching it. And if you can get the concepts for now, I think, or next week, that'd be enough. So in front of you, you can see what we think are what you need in order to be a successful trader. And it might seem a little bit reductive, but I mean ultimately that's it, right? If you can pick direction well, you have a few strategies in your pocket, and you can manage your risk effectively, then you will be successful, right? And in fairness, the path to getting there is having a set of trading rules. Okay, so that for me, that's like the thing that kind of brings them all together, right? So each of those core topics you've got to be good at, but they need to be applicable through a set of trading rules. Okay, and I really can't stress that enough. Some people will have very vigorous trading rules, and they kind of like need all the stars to align. Venus needs to be in retrograde, and their favorite TV show needs to be playing on in the background. Whatever it is, whether it sounds silly or not, you need to have some set of rules. And they can be really vigorous, or they could be much looser, right? Depending on what works for you. When we teach our clients, we give you our set of trading rules, like the fundamentals of our set of trading rules. And then as you get good at what you're doing, then the idea is that you kind of evolve them to suit you personally, right? Because there's a billion ways to trade the market, and there's a billion different ways to be successful trading the market. So we're not pretending that we've got the be-all and end-all of trading rules, but it certainly is, as far as we know, the best foundations, and it's seriously good bedrock for your learning and as a beginner. And then as you get to learn yourself more and you manage your psychology and you manage your risk, then you can evolve them to suit you personally, and we'll help you do that as well. And that's one of the benefits of trading through us and doing education through us. But I do want to talk about one particular type of education. It's the beginner's education, right? And the goal of it is really to fast track your learning and to help you have a confident and efficient outcome. Okay, so you can go off and watch these types of webcasts, read lots of books, you can watch YouTube videos, and there's a lot of free resources out there that are really awesome. And that we in this office also digest, right? It's just not the best way to learn how to trade successfully, in our opinion, right? Especially if you don't have like a mentor to guide you. So I feel like you need one or the other. You either need a mentor and some free education, or you need paid education and, you know, just some good bloke who's willing to really kind of guide you all through it. It's obviously best to have both, and that's what we provide, right? And we provide that because we find that that's the best way to make you successful. Now, our education is not something that we really profit from. It's not a profit center for us. It's actually something that I would say, basically break even from. And the reason why we don't charge more money, even though that we have in the past, is because ultimately it's just a stepping stone. We want to deliver you the best education, deliver you the best support, because if we can help you become a successful trader, then you're likely to continue to use our services, and that's what keeps our doors open. So I just wanted to kind of preface it there a little bit. The reason why I'm talking to you about this education is because we truly do believe it will help you become a successful trader, and you know, it's built around providing you that support. It begins with a 2-day face-to-face training session in our boardroom. Now, with COVID on, there is live streaming available if we can't do it in our boardroom. It's very touch and go, isn't it, right? Victoria is, you know, always ready just to snap into lockdown, aren't they? So we don't know how life's going to be, but if you can't make it face-to-face, you know, you'll still get your manuals and you'll still be able to attend the session via live stream. You'll be able to see Carlo's face. You'll be able to see what he's presenting on, etc. So it's still very interactive. It's like being in the room without being in the room, obviously. Now, Carlo, who I've mentioned, he is actually the co-founder of Traders Circle, right? He's basically retired now, right? He just trades at home, that type of thing. But, you know, he still runs our education, still has a foot in the business, that type of scenario. So you're not only learning from someone who's been teaching and trading, you know, as part of the business, but he's been doing it for about 25 years, right? I think that's, but he's also done it overseas as well. So he's taught locally and abroad. So it's a good opportunity here from learn from a professional trader and professional educator. We keep those groups to a small group of 10, and the next session we've got has got 9 spots. Sometimes we stretch it a little bit, you know, if there's one last minute and someone's like, oh, I can't do it next time, you know, maybe it'll be 11, but we try to keep it to a small group of 10. That way we can focus on you as an individual as much as possible. What we teach during the 3 days is obviously the core topics that we think you need to be good at, and we teach you Carlo's exact trading rules, as I mentioned earlier. So you'll be able to analyze the market step by step. You know, you go through the market, you might pick a stock like we did today. You look at BHP or Suncorp or some of the other stocks we looked at, and you just apply your rules, step 1, step 2, step 3, step 4, etc. In terms of picking direction, we're going to focus on technical analysis. As I said at the beginning of the webcast, as Tim has mentioned, we just think it's better for short to medium term trading. That's not to say that you shouldn't like look at fundamentals, right? You know, I don't think it's about doing one or the other, but I do believe that from a trading perspective, the bulk of your analysis should be technical, and from an investment perspective, then the bulk of it probably should be fundamental. In terms of strategy, we're actually going to teach you mini warrants, right? Now, you can apply what we teach you to shares, and you can apply what we teach you to other instruments as well, right? Because this is a beginner's course. It's about setting the right foundations, and what instrument you use is largely kind of irrelevant, because at the end of the day, if you can pick direction and manage your risk effectively, then it doesn't really matter what you trade, right? But we like trading the Australian market. We're going to be opening up to the US market soon, right? Just as a bit of a preview, I guess. But you know, we like trading the Australian market. We like trading instruments that are traded through the exchange, right? Which means they're accountable, they're you know, they're protected, they're transparent. Things like shares, mini warrants, options. We don't trade CFDs because that's on someone else's balance sheet, and that's a terrible idea. But I won't get into that. But yeah, so the idea is that you know, we trade instruments that are traded through the exchange, and we think mini warrants and shares are a great way to trade this market. Okay, options are awesome as well, but we don't teach that to beginners. We used to. It's just too hard. We want you to focus on picking direction, and we want you to focus on managing your risk. So we teach you a couple of easy strategies that allow you to apply your direction picking without going into the full-blown flexibility that options provide you. Now, we do run another course on options, which you can attend if you can do if you want, or you don't have to, right? But if you do want to become a successful trader, then this course is a good place to start. And then you can branch out from there. You can do options or not do options, or you could go look at something else if you want to. But ultimately, we're trying to teach you everything that you need in order to be a successful trader in this one course. And finally, the last thing we'll teach you is risk management, right? Because obviously you're not going to get every trade right? And if you do, then you don't really need me to be helping you. The idea is that on the trades that you do get wrong, and you will have losses, and you just need to get over that, and you will have a string of losses that'll happen at several points during your trading career. You need to be able that hopefully doesn't wipe out the profits that you've made with all the good trading that you've done, right? Now, following the 2-day weekend, right, you get access to our support network, right? And that covers a few different areas. The bulk of it is the members area, right? And the members area is our online resource center that provides you trade recommendations. It provides you training videos of all the core topics that we taught during the session. Those trade groups I was talking to you about earlier that we run every day, Monday to Friday. It will give you daily market updates, research, earnings calendars, all these kind of resources to not only assist you in your learning, but also when you're ready to start trading. We'll provide you all the trading software we use. So the software that you saw Tim using, we'll actually provide you. You'll get access to the calculators. And finally, and I think this is the most important, you actually get your own personal trainer. Now, I mentioned to you earlier that you want to have good education, but ideally you also want to have like a mentor. And that's what your personal trainer is. There's someone that you can call all the time, as many times as you want during the day, obviously. Try to leave them alone, at night. As many times as you want during the day, email them, ask them your questions. They're there to run point, make sure that you're, not making those silly mistakes that you're prone to making as a beginner. They're there to really hold your hand and help you learn and help you practice, and then help you transition to live trading when you're ready. During that 8-week period, we also run a paper trading competition. Like any competition, the winner gets a prize. We just kind of, we want to promote the idea of practice and learning during that 8-week period. And so we kind of pit you against each other, create a bit of competition, friendly competition. And it's like trading through a demo account, that type of thing. Yeah. And, you can trade in that competition, the recommendations that we put out. You can ask your trainer for trade ideas, because all our trainers, including myself, are also advisors, right? So, we're doing this live anyway. We can also help you with your trading competition. It's not cheating. And then when, like I said, you're ready to transition to live trading, your trainer can basically become your advisor. And we just want to be able to continue working with you during your trading career. So we want to be able to give you trade ideas. We want to be able to help you price up strategies. We want to give you, lots of support, as much support as we possibly can in order to help you become successful. Because again, if we can do that, then you're likely to continue to trade through us and use our services. Now, the investment of the program is a deposit of $995, and that secures your seat. We'll give you access to pre-learning material, right? Which you don't have to do, but if you did want to do it, because a lot of people are eager and are keen, there's a whole bunch of videos that I recently actually recorded. I don't know, like 3 months ago, maybe something like that, which are fresh and brand new, and so you'll get access to that after you've paid your $995, and then there's only one more payment of $995. So the total investment is just under $2,000, and that gives you the 2 days face-to-face in the boardroom with Karo, right? Learning exactly how he trades. And then following that, you get access to 2 months of online training where there's videos and trade groups, trade recommendations, all those resources, full access to all the software and technology, and you get your own personal trainer. Does that sound reasonable? All right. So I appreciate you, letting me run through all that. The next dates, if you were interested in the 19th and 20th of June, there is still one spot left. We had a deferral, right, which is why it's there. Usually these things book out a month or two in advance. The one after June is, I think, the 11th of September, so quite some time away. If you're interested in the options course and you feel like you don't need this type of education, then that's totally fine. I will talk about that during the next webcast. All right, like I said, the next session, Thursday, the 10th of June. At 7 p.m. Right, so I think Tim and I will both be running that. It's very likely that Tim and I will both be running that. Yep. All right. Well, thank you very much again for joining us today, guys. How have we gone? 2:03. That's not bad timing, is it? Right. I think I started at 1:02 anyway, so it's been just over an hour. We really appreciate you taking the time to have a listen to what we have to say. If there's any other questions, make sure you type them in. If there's any other stock that you want us to look at, maybe we'll cover it in the next video. And if you'd like to know more about any of our education or anything like that, you can always call up and say, "G'day, g'day," and we'll have a chat to you about what your individual needs are. All right. And my partner's just jumped into a meeting, so I might mute myself.
Yep, I'll just quickly jump in. There's a few questions here just to be answered before we turn it off. And I'm sorry if my dogs start barking in the background. There's someone at the front door. So basically, okay, I'll just start off with the self-managed super fund question here. Can you include mini warrants in the self-managed super fund? Yes, you can, Paul. But you need to make sure it's part of your self-managed super fund mandate. So you'd have to talk to whoever set that up for you and make sure that it is part of that you can trade derivatives. And I'm not sure about the detail. I'm not an accountant or anything like that. So I can't give tax advice or advice around the self-managed super fund. I just know I know of a lot of other people that do it, and it just has to be part of your mandate. Okay, so is Woodside Energy a good investment? To answer that real quickly, I will just grab the control of the screen again. Just give me a second. I'm sorry if you can hear the dogs barking in the background.
Hang on a second.
Okay, so Woodside here, basically we've been watching this for quite some time, waiting for it to bottom out. We're starting to see some signs of bottoming out now. It's launched through a few key levels here. Now, the reason why it's jumping all of a sudden at the moment is there's a lot of good talk around oil and the fact that it's going to go over 70 US a barrel. So that's a big part of the discussion that's driven this higher. Now, I like this from a trading perspective, okay? I'm not a big fan of the energy sector as a whole for a long-term hold. I like Woodside. I think it's extremely cheap, especially when it was down at 22. It's still cheapish here. I'll just give you a bit of example. Most of the broker analysis is suggesting around 27. So fundamentally, from a forward PE, it's sitting around 14. So it's still fairly cheap, okay, around these levels. All right. I do feel eventually it's going to get itself back up to around 26. But the problem with a stock like Woodside and the problem with a lot of these energy stocks right now is if you look at our scoring, that's scoring very, very low from an earnings and a growth score point of view. So only reason why I'd buy it now is because it's cheap, it's on sale. Once it's not on sale anymore, I don't really want to buy it as a long-term hold. Okay, that's the way I'm seeing it at the moment, just to answer your question there, Darren. Okay, I like it short term. I think it could easily get back up to 26, 27 over the next few months, especially if crude oil breaks that 70 level. I think that'll all play out. But I wouldn't be holding it in my portfolio for years and years and years. Once it gets expensive again, I'd be happy to sell it. And Paul, just to answer your last question there, next time can we talk about exiting before expiry for sold strategies? Probably need a little bit more flavor around that, Paul, I guess. Once again, I'm happy to have a chat during the week if you want to give me a ring or give Karo a ring and just have a quick chat over the phone about that, just to give me a little bit more flavor on what you're trying to do, whether it be a cover call, whether it be just naked sold positions, or whether it be some kind of spread strategy that you're trying to do. Just, yeah, look, give us a little bit more detail. If you just want to shoot an email or give us a ring, and then happy to have a chat to you about it in the next session. So don't forget, next session is Thursday night, 7 o'clock, talking about strategy, where we'll be talking about things like, where we place our stops on particular strategies and things like that. We'll have a few pre-prepared. We might even show you a few of our recommendations that we've sent out to clients and that sort of thing, just to give you a bit of a sense on what we do. Okay. All right. Well, I think we'll finishing up there. Once again, thank you very much for jumping on and listening to us today. And yeah, I'll hopefully see you all next Thursday.
Thanks, guys.
Bye for now.